of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Create the perfect relationship between you and your body. Treat your body with all your love, honor, gratitude, and respect. When you make it a goal to adore your body and accept yourself completely, you are learning to have the perfect relationship with anyone else you are with. Market-wise, let's take a look at it out here. We had the Dow down 297, NASDAQ off 77, S&P's off 35, gold contract down 440, trading out at $1,720 an ounce. Silver off $1 at $33.31 an ounce. Platinum off $7 at $1,588 an ounce. Oil down $2 at $91.14 a barrel. Bonds, check this out, folks, up $3.50 at $142.12. This little baby, this bond market, folks, is going for the B point of a monster ABC up. You're talking about a 160 30-year bond. That would put the 10-year at, as Tiger, Mark, and Leden has calculated at, that's right, it's a monster. It's a monster. And that puts the 10-year at 1.50. You take that B point out with volume. King dollar. King dollar up $1.11 today at 77.42. Euro down 15 at 137. And the yen is up 16 at 78.33. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what we have. You're down $35. You have an expansion with volume. It's all there, folks. There's a false break topside. Last Thursday, you come back inside the range. You have an acceleration of volume. You did 1.3 billion versus 1.1. This little baby's going to be making its way down to this lower end of the consolidation. You know, so bottom line is the trouble in paradise here. Big time, too. We go to the Dow Industrials. You take a look at the Dow. You got to remember something, folks. When you have a false break down or up, in this case, we had a false break up, you're going to go down to the other side. In this case, we're going down to the other side. We have an expansion with volume happening. Now, that's good because we're at the beginning or at the higher end of the consolidation. So as you get to the lower end of the consolidation, more than likely you're going to see that contract, and we're probably going to stay in the same consolidation we've been in. Dow Industrials, you're down 297, and this little baby wants to get to the bottom of that consolidation, and that gets us down into that 10,000 area. So that's another, you know, well, it's big numbers. What's that? Yeah, that's 1,600 points. We take a look at the NASDAQ, the composite first. Composite, expansion with volume, has all the deals in it. Now, the NASDAQ has some larger problems. You know, the NASDAQ left the whole island up here. It left a huge amount of investors hanging out on an island. They basically bought into the breakout last Thursday. Trouble in paradise. Down $77 here, 2,600. NASDAQ wants to, you know, get into this 2,300 area. That's where this baby wants to go. Now, let's go over to the bond market. We take a look at bonds. This is pretty amazing. The thing that's amazing in the bond market is that it's like, oh, my God, are rates really going to go this low? Well, once we start looking at them, you're going to see why. Okay, 30-year bond here today. What do? You know, we're trading at 142.11. You want to see some juice, folks? We did 529,000 contracts, okay? Wide price spread, accelerated volume. This baby, this is after only doing about a 0.23 correction. That sets up, number one, that the 147 you're going to go after. Number two, you take the 147 out, there's an ABC structure up to 160. Okay. So, what does it all mean? Well, you have a lot of things happening simultaneously. What you have is you have a market that is in pure distribution, has been in distribution, not only in distribution, if we bring the S&P back up again. Let's bring this up. I went over this last week, but let's bring it up right now so you can see the correlation. First, I'm going to bring this back just to the beginning of the year. So when we bring this back, well, I'll bring it back to 2010, actually. When I bring this back to 2010, what you have is that the smaller part of the distribution, of course, is from January. You know, we're at the same price we were in January. So from January going all the way to August, all those folks are in a bad position. That's your supply line. That's what's getting sold up here. The largest supply line, however, folks, is when we bring it back to 2007. The largest supply line is like a monster. I mean, it's huge. There's no two ways about it. What you have is that supply line, you know, folks have been in a bad position for quite a while. Had a nice acceleration up from March of 09. Bottom line, that is a huge amount of stock that's up there that wants to get pushed out. Okay, now let's talk about MF Global. So, big problems here with MF Global. Last night when we get off the air, what wasn't on the table was that MF Global, all of a sudden, funds are missing. Huge funds, folks. Over $700 million. Okay, let me give you a little history here. MF Global, folks, had, depending on how long you've been in the business, there was a company called Refco. And Refco, before MF Global took them over, was also one of the largest future brokers out there. Now, Refco was also a clearinghouse and a futures broker. What happens is that when you're a clearinghouse and a futures broker, okay, that is when you can absolutely take clients' money. Now, what's supposed to happen on a continual basis is this, is that that's what clearing firms are for. You know, if you go to a broker-dealer, most of them have a clearing firm, the money's at the clearing firm. But when you are the clearing firm and you are the broker-dealer and you have a holding company that holds both of them, what does it do? Well, it opens up a situation that you can use, you know, this is illegal, by the way, that you take clients' money out of segregated accounts and you're using it for the business. Okay, so, yeah, dip into the till. You know, and by the way, this is no different than a Ponzi scheme, and it's no different than full tilt poker. Absolutely no different. If you saw what full tilt poker did, what they did is that they used the client's money after the feds raided them in order to run the business. What MF Global is accused of at this particular point is taking the client's money to run the business when they had no money. That is getting correlated by the CME. Let's go over to the Chicago Merc right now, okay? The Chicago Merc was down 23 bucks today. Now, the Chicago Merc, of course, more than likely is on the hook for some big money. Chicago Merc, what they say, let's see, this is the Chicago Merc. They've been coming out with a bunch of press releases all day. So, okay, Chicago Merc. MF Global Holdings under investigation by the U.S. regulatory after filing for bankruptcy protection violated requirements that keeps clients' collateral separate from its own accounts. The head of the world's largest future exchange today, Craig Donohue, the CME Chief Executive Officer, said on a conference call with analysts today that MF Global isn't in compliance with the rules of the exchange and the Commodity Futures Trading Commission. Well, let me tell you something, folks, okay? These guys, even at the CME, are going to scramble to cover themselves. But when you dig down into this, what also is out here is this, is that the CME in September had already told MF Global that their mark-to-market of the European bonds wasn't correct, and they wanted them to go out and get money. So watch how this works. That says to me, this is just a common sense deal, that says to me, number one, if you're not marking to what it's worth, that's cooking the books. Number two, the CME knew it. They have nothing to stand on flat out, because the bottom line is every futures broker, every regular broker, the financials themselves, that means the financials in September weren't clean. It gets better than that, though. You got to remember that MF Global pushed out a $700 million bond offering that S&P, now this is the same S&P that downgraded the U.S. debt. This is the same S&P that downgraded U.S. debt. They gave MF Global an investment grade bond at $700 million. That $700 million got pushed out to investors, and that $700 million is worth what today? Zero. Bye-bye. See, you don't want to be here. The first interest payment was never even made on the $700 million, folks. Okay, so now let's put it all together. When you put it all together, what is it? It's regulators not doing their jobs. It's accountants not doing their jobs. The bottom line, folks, is that how this got grabbed at the end, now, it totally makes sense to me now that MF Global, John Corzine, bet the farm. You know why, folks? They knew that the farm was already broke. So why, yesterday I was talking about why would you bet $650 million and leverage to $6.5 billion, and if it's wrong by 3%, you're out of business. They didn't have any money anyway. So they bet the farm. They lost. They lost the farm. Now we'll see what else is going to get lost. Because the bottom line is that this is not only over the top, but what you will see here is you're going to see all these figures basically protecting each other. What you will absolutely have here is you're going to see regulators protecting other regulators, protecting other broker-dealers. Now, this is the best part of it, which one of the targets just brought up, but this is really cool. So, how did it all come down? Well, it come down because IB brokers, okay, came in and wanted to buy MF Global. When they came in, it took them all of 2 hours, folks, to find that there's huge amounts of money missing. Okay? So the bottom line is what? Is that it was always there. It was it's another Ponzi scheme. That's the bottom line. They were using clients' accounts to run a business, and the Ponzi scheme hasn't been used out there yet, but that's exactly what it is. It's out in our Ponzi scheme. Now, it's going to be, I can imagine how Corzine and the rest of them are going to run from this thing, and what the MO is going to be. You can expect, I can tell you what you can expect from the establishment. Well, you can expect that there's going to be another curveball, and they're going to try to get your attention somewhere else. The bottom line, the attention is going to be on the regulators, because you know what? They're still sleeping. We're going to be right back.